hello, first of all, lovely to be with you this evening. And before I launch into what I'm going to talk about, which is your annual reporting and accounting to the Commission, I just want to say a few words about some events that are coming up in the very near future. The first of which is our annual public meeting, and this is our annual opportunity to talk face to face with as many charities who want to come along, and also with members of the public. It's on the 15th of October in Mossley, and there are details of how to register on our website. Crucially, this year we want to talk about our future plans. As you all know, public expenditure is reducing. All departments are struggling with less and less money, and we want your views about how we're going to manage that, what we're going to stop doing, which may include the kind of event that we're doing this evening, a lot less of this. And then also we're going to have a guest speaker which is on a topic which is, I think, extremely front of mind for a lot of charities this year. So was the stories that we've had in the media splashed all over national news of what is happening in some charities. Nick Garbett is going to be talking about how to protect your charity's reputation when things go wrong. So hopefully that will be very practical. As I said, we're looking for comments on our draft strategic plan, details of that. So the outline of what we are planning to do and not do will be on our website for 8 weeks, and also a form where you can give us some feedback. So if you'd like to have your say in advance of the meeting or as well as the meeting, please take a look at that. And then we've got another consultation coming up, which is very relevant to what I'm going to talk to you about this evening. We check a proportion of the annual returns and accounts that come into us. We can't check all of them because there are thousands, but we check them on a risk basis. And at the minute when we check them, if they fail, it's not obvious on the register that they've been checked and that they have failed, and we feel that the public should know and that charities should feel there is some consequence to failing the testing. So what we're proposing is that we will indicate on your register entry that they have been subject to a basic compliance check and that they have failed to comply with requirements. So we're going to open that consultation on the 26th of September, and it will run until Wednesday the 21st of November. And now that does affect all of you, so we'd love to hear your views on that. Now, what I'm going to talk to you about this evening then is the role of the Commission, just briefly, the benefits of annual reporting, various aspects of annual reporting, the guidance that we have available for you, and the lessons that we've learned so far from the several thousand sets of reports and accounts that we've had, and then a couple of related issues to do with matters of material significance and serious incident reporting. So I move on to my first slide. You know, why do we need annual reporting? It enables the register of charities to be kept up to date, and that's a crucial part of what the Commission is for, so that the public has transparency and so that charities are accountable. And when we have annual reports, we know that your charity's details are up to date and the public can see your accounts. It also then alerts us to potential issues that may be happening in a charity. So if a charity is not meeting its obligations in terms of its annual reports, that's usually a sign that other things are going wrong as well. And we can step in to see if things need to be put right. And then it allows you to demonstrate that you're compliant with the law, which is a good message for the public and for your donors and supporters. And it allows the public themselves to sit at home, go onto our website, open up your accounts, open up your annual report, seek their own assurances and find out what you're doing and if they want to support you. And then crucially, part of what we're going to talk about this evening, it offers you an opportunity to tell your story, to talk about your achievements, to talk about your challenges, how you do your work, what you do, and to show the public that you're doing a great job. This regime was introduced gradually, as with all of the parts of our work. We had interim reporting from 2014. Then from the year after that, we had 42 sets of accounts submitted. We had regulations made by the Department for Communities in 2016, and that is full annual reporting regulations that apply to all registered charities. And then in the last financial year, we had just over 3,000 sets of charity accounts, and we're anticipating about 5,500 this year. So that will go up exponentially, that number. Of those 3,252 that we received last year, in addition to those 3,252 that we received, a further 672 charities failed to comply. And when we say failed to comply, we mean they didn't bother to send us anything. They failed to comply with the legal requirement to submit various things to the Commission. And so on their register entry, instead of the nice green letters that say up to date, it says in default in bright red letters. That's not a good message to the public or to your funders or to anybody else. So we aim to get that number down and to get reports in by the deadline. But this is a culture change for all of us. And the reason we've produced a great deal of guidance is to talk organisations through how to do this. It's straightforward, but it's a question of getting used to it and getting into the habit of it. I don't want to spend too long on this because I'm sure you're all very familiar with it, but there are thresholds for accounting and reporting. If your charity has an income of less than £250,000,
Slides can be available.
yes, indeed they can be. I've just been asked if the slides can be made available, and they certainly can. If your charity has an income less than £250,000 a year, you don't have to do SORP compliant accruals accounting. You can elect to prepare receipts and payments accounts. If you're not a company, that's crucial. If you're a company, you do have to prepare accruals accounts. These must include a statement of assets and liabilities. They must have an independent examination, and the trustees are responsible for ensuring that the independent examiner is an independent person as far as the charity is concerned and has the requisite skills to carry out the examination. I'm going to talk a bit about that later, but we've got very comprehensive guidance on that. You must send a trustee annual report, and you must send your annual monitoring return. And what that looks like depends on the size of your charity within that £250,000 bracket. If you're between £250,000 and £500,000, you must prepare accruals accounts using the charity's SORP. You can opt for an independent examination, but it can't just be an independent person selected by your trustees. They must be a member of one of the bodies named in the Act. They must be a qualified independent examiner. You must also submit your trustee annual report, and you must submit the annual monitoring return, and you'll have to submit additional sections of that because you're a larger charity. And then over £500,000 income per year and group accounts, any charities that have to bring their various activities together into group accounts, it's as above for the 250 to 500,000, but you must have a full audit. You can't opt for the independent examination by a qualified person. So those are the categories. I'll just flash this slide up very briefly. I'm sure you've seen it before, but the message is that the accounts are due 10 months after the end of the first full financial year after you register. So if you register in January, your next full financial year wouldn't start until April that year. And that financial year would run until March the next year, and then you have 10 months after that. So it's 10 months after the end of your first full financial year after registration. And again, there's a chart on the website to help you work that out. Now, the Trustees Annual Report. Most charities have been preparing an annual report for donkey's years, but the Trustees Annual Report is something specific. It's a legal requirement now for all registered charities in Northern Ireland, and its requirements are set out in legislation as regards its contents. It is a key document. It's a narrative that puts meaning to the numbers. The public don't just want to look at your accounts. They want to know what you're doing, and they want to know what the numbers in those accounts mean. So the annual report is your chance to tell your story, as it always has been, but now it's a mandatory requirement. So the Trustees Annual Report will be able to say what the charity has done, its outputs, what you have achieved through doing that, so your outcomes, and crucially, what difference you've made, the impacts and the benefits of your work. And I can't stress enough, it's to be prepared by the trustees. It's not something you hand over to your accountant or your lawyer if you're lucky enough to be able to afford one. It has to be written by the charity, because only you can understand what you have been doing and what that means. Charities obviously are unlike commercial businesses. Their goals are to manage funds effectively to further their charitable purposes for the public benefit, and your annual report has to set out how you've done that. It's not like a director's report. So it can't be a template like a director's report. Only the trustees and those really involved with the charity could put a meaningful narrative to it. So your accountant might help you in terms of compiling information and checking that everything that's meant to be in there is in there, but only you can report in terms of your activities and what difference they've made. Now, I hope I'm not teaching you to suck eggs, but really making the most of your annual report, it's a legal requirement. What you want to do is, you're not allowed to kill birds with stones anymore. You want to feed two birds with one hand, and you want to make it a big marketing tool as well. So it's an important milestone in the year, preparing a trustee's annual report, and it's a chance to take a step back, see what you've achieved, congratulate yourself and your staff and your volunteers, think about the difficulties and the challenges and articulate those, because the public want a real life view of what charities are dealing with. So give yourself a pat on the back, tell the world what you've been up to, and take the time to reflect on your successes and to thank those who have participated in it. And crucially, paint a picture, and paint a picture of the difference you have made, because people, all of us, find it easier to count outputs and to describe activities. It's much, much harder, and there's been a lot of work, great work done in the sector in terms of outcomes-based accountability, but it's much, much harder to talk about the actual difference you've made. We're lucky in that there are now many tools out there to help you do that, but you want to be able to talk about the difference that your charity has made in the past year to its beneficiaries. So what you want is, along with the annual accounts showing how you spend your money and what money you've got in, give the public a full picture of what it is that your charity is and does. Transparency is a key reason for regulation. You know, the public want to know what you're doing with their money and with their goodwill. So the Trustees Annual Report has a really important part to play. It provides important administrative information as well, and quite often people are interested in how you administer the charity and what your mechanisms and safeguards and procedures are, but you don't need a 1,000-page report. What people say is that you know, keeping it focused and short really focuses the mind on what it is that the charity is doing. A long report isn't going to be picked up and read by the public. And we've actually had feedback from charities who say the fact that they now have to focus on the Trustees Annual Report and talk about the public benefit requirement has made them think, oh, maybe we don't do exactly what we were set up to do, or maybe we've drifted because of various kinds of funding away from what it was that we were doing previously. And having that point in the year where you're forced to focus on your public benefit, which is flowing from your purposes, and so forced to focus on your purposes again after registration, can help trustees just check that they are doing what they're meant to be doing. If it's done well, reporting on public benefit through the Trustees Annual Report is a really effective tool to help your charity stay focused, or indeed to refocus if you feel you have drifted a wee bit, and to plan your future activities in the year that's coming. We did some research a couple of years ago, and it has been really illustrative, I think, of why something like a Trustees Annual Report is so vital. This research was looking at public trust and confidence and what the levels are, and this slide is talking about the levels, and crucially what the drivers are. Now, you can see in the levels here that 79% of people had a medium or high level of trust in charities. That's fabulous. And we wanted to know why. Why did those who trust charities feel that way? And so we asked things like, what factors influence your decision to support a charity? And if you look at the second one on this slide, awareness of the impact it has on the cause it represents. Well, how are you going to communicate that to everyone through your Trustees Annual Report? Talk about your public benefit, talk about the cause you represent, talk about your purposes, and talk about how you're delivering on those purposes through the activities that are delivering your public benefit. The top one, the cause the charity represents, is important to me. It's something where you're going to have the opportunity to connect with the public and convince them that your cause is important to them. So those were really eye-openers, those factors, in terms of what people choose to support and why. This next one as well: localness, reciprocity, the cause itself, and guilt. So what factors influence you to support a charity? We recognise all of those, but again, tell your story, tell how you're local, tell what you're doing in each local area briefly, connect with people. The themes that might be important to consider when planning your communications are about targeting your messages, and you want to target your message around these things because these are the things that people say they want to support, make them want to support you, the cause being the other really important one. And then what are the factors that are important when you're deciding to trust? So the last ones were what are important when you're deciding to support. These are what are important when you're deciding to trust. This is basically the headings of your Trustees Annual Report. You know, what are you doing with our donations? Are you doing what you say you will do? Do you have a positive impact on the cause that you represent? Are you well managed? How transparent are you about the way you spend your funds? How do you raise your funds and collect donations? and how open and transparent are you about your activities. So all of that should be in there in the Trustees Annual Report, and those are the top things the public tell us make them decide to trust a charity, that it's transparent, that it's open, that it uses its funds properly, and that it's well managed. So not only is this annual reporting a legal requirement, it's an opportunity to get these messages across to the public, because they're what the public want to hear spelled out. And what do they mean by transparency? Well, 92% of people agree that charities should be transparent about how donations are spent and how the charity in question benefits the public. But only 40% know where they could go to get that kind of information. So our answer is, of course, the register, and that's good for us as the regulator, but it's good for you as the charities, because your information will be on there. And once we get the public into the habit of using the register, knowing about the register, and going and checking on the register, they'll be able to get your information fast. We're going to undertake a piece of work in the very near future, it's already underway, which will produce guidance on using the register, so we can say to the public, this is all the information that's on there, this is how you can search it, this is what you can find out from it, this is your introduction to the world of charities. That may then take them onto your own website and they can find out even more about you. But their first port of call might well be looking at your Trustees Annual Report and your accounts on the register. So that makes those a really important shop window for your charity, really. Now, I've got some examples here, because we're always asked, well, what are you looking for? We're not looking for you to cut and paste anybody else's examples, is the first point. But this we thought was a good example of describing the kinds of activities that deliver public benefit. This is a church, and what it's doing is giving a really good level of detail, not too much and not too little, about the spread of its activities. And these activities are how it delivers the public benefit. So it's gone down through all the different things it does. It's got clear headings. It's got a paragraph on each. It says who they're open to, who benefits from them, what they entail. And that's just very clear. It's very clear and simple and straightforward. Another example is this one, which is just nice and eye-catching. It really brings it to life if you're telling your story creatively. This is not a PR workshop, and a lot of you know more about this than me, but you know, tell your story visually as well as narratively. And so this one gives, again, a good sense in short paragraphs about what the charity is doing, and then just gives concrete examples of real people participating in those activities, which are what's delivering the charity's public benefit. And I've included this one because this is a Brownies group, and a Brownies group has submitted a 3-page Trustees Annual Report, and that's grand. This Brownies group has 12 members. We don't expect a 100-page Trustees Annual Report. It has to be proportionate to the work of the charity and the size of the charity. Just make it clear and concise, and length isn't really the issue. As you get up into much bigger charities, there is guidance on what is mandatory to include. And for smaller charities, we've also got guidance on the website in terms of what should be in there. But this is a really good example of just a short and to the point annual report being all that's required as a proportionate response from this charity. So what are the actual legal requirements? The Trustees Annual Report must include certain administrative details. So it has to have your name, your address, your Northern Ireland charity number, the details of trustees. It should have trustee signatures, and it should have the date of the financial year end to which the report relates. Financial year ends are a thorny issue to which I will come back because they cause a lot of problems. People tell us one thing at registration, and then when we tell them their reports are due, they say, oh no, that's not our financial year end. It must have your constitutional details. How is your charity constituted? What kind of governing document do you have? A summary of your charitable purposes. Do not replicate your entire governing document, and how you appoint trustees. It must have a section on public benefit reporting. This is a key new requirement. I'm going to talk a bit more about that in a minute. And it must have a financial review. So this is a summary of all that detailed information that's in your accounts. A review of in your Trustees Annual Report, put in a review of your position at year end, a note about your reserves policy, and some details or an overview of any fund which is materially in deficit. So it's headline information that at a glance helps the public to see what the position of your charity is at the end of that financial year. There are additional requirements for charities that are preparing SORP accounts, either because they are over 250,000 a year or because they're a company. And that's taken care of in the SORP guidance. And there's a full microsite, which isn't very micro, devoted to the charity SORP, and details of that are on our website. So let's talk about public benefit reporting. We were all introduced to the world of public benefit when we started to talk about charity registration. And the test we're applying at registration is we're looking at your purposes and we are judging whether those purposes are capable of being delivered for the benefit of the public. So if those purposes are capable of delivering public benefit. So your charity must have exclusively charitable purposes and each of them must be for the public benefit. So it's at the heart of what has made you a charity. So now you're on the register and you have to report to us. We're looking for some different information about public benefit. Your public benefit statement from registration will remain on the register. What we're looking for from you year on year is about the benefit to the public that you have actually delivered through your activities during the past year. So it's about what have you done and how is that fulfilling your charitable purposes and thus delivering the public benefit. So that's a slightly different take. At registration, we say, don't tell us about your activities. But now we are saying at annual reporting stage, tell us about your activities and how you delivered the public benefit. You must report on the public benefit by including certain elements in your trustees annual report. So we want a summary that explains the main activities undertaken during the year to further your charitable purposes and the main achievements of the charity during the year. So those are two of the pieces of information that need to be in there. And then we must have from your trustees a statement as to whether they have complied with their duty to have regard to our public benefit guidance in the running of their charity during the year. And that's a legally binding statement that the trustees have to attest to. We've done a checklist, which is on our website called ARR08. And it's to help you consider how you might report on public benefits. So there's a toolkit to help you when you're registering to help you write your public benefit statement. Likewise, there's a checklist to help you report on your public benefit in the annual report. And there's a lot of guidance on the website in those documents that are on the screen now. So we come to the charity SORP. For those organisations which are company charities or which have an annual income of over 250,000 a year, they must prepare accruals accounts and they must use the charity SORP. That's mandated in regulations that underpin the law. As the SORP is currently constructed, it was last updated in July 2014, and that was before the Northern Ireland regulations came into effect. So when you read the SORP documentation, it doesn't actually include reference to Northern Ireland being included, but we are. And so you need to make sure that you do follow the SORP, even though when you read the guidance, it won't refer to the fact that it's mandatory in Northern Ireland. Northern Ireland charities must adhere to the requirements set out in Northern Ireland legislation and any additional requirements set out in the SORP, and I'll talk about those in a second. So the requirements are broadly similar here, but the charities SORP section in FRS 102 refers only to public benefit reporting for England and Wales. I'm emphasising to you now, and our guidance emphasises that that also applies to Northern Ireland. So don't be caught out by thinking, oh, great, we don't have to do that bit because the SORP only says it refers to England and Wales. The next updated version of the SORP will make it very clear that it also refers to Northern Ireland. The SORP requires that the trustees' annual report set out some very specific things, and so your annual report must be done this way, and our guidance on the website will talk you through this. You must set out your objectives and your activities, and you put your public benefit reporting in this section. You must set out your achievements and performance. There must be a financial review. There must be a section on structure, governance and management. There must be a section on reference and administrative details. There must be a section on exemptions from disclosure. However, the SORP says there must be a section on funds held as a custodian trustee on behalf of others, but that bit isn't actually in effect in Northern Ireland. So that final bullet point will be on the SORP site and in the generic SORP guidance, but it doesn't apply to Northern Ireland, whereas it's the other way around for public benefit reporting. Northern Ireland won't be mentioned in that context, but it does apply in Northern Ireland. Now, there is additional content in the trustees' annual report for larger charities. And so if you have an income of over 1 million, you have the same categories, but you have to include a greater degree of detail. So you need to go onto the charity SORP microsite and look at the full guidance there, and also at the guidance on our website. Now, if you're preparing receipts and payment accounts, if you're a charity which is not a company and your income is under 250,000, you can do receipts and payments accounts. But what we're seeing is that some of them are being sent in and they don't include all the requisite contents. So they must include, in addition to the trustees annual report, a receipts and payments account, which is a full analysis of incoming and outgoing cash for the year. It has to show receipts and payments for sales and purchases of assets and investments in a separate row. We've got guidance on the website which shows you how to set out receipts and payments accounts. Even though that's not mandated in law, we thought it was helpful to provide guidance on how it should be done. You must have a statement of assets and liabilities, and this should outline the main assets and liabilities, and that needs to include your cash balances at year end. And you must be able to account separately for each unrestricted, restricted and endowment fund. So if you've got different funds, you have to account for them separately. Now, as I said, accounting standards in law don't actually apply to receipts and payments accounts, but there has to be sufficient detail to gain an understanding of transactions and of any surplus or deficit. There is no statutory format, but you should be preparing them in a consistent way from year to year so they can be compared. And if you're providing valuations in a statement of assets and liabilities, if you want to get your assets valued, they should be relevant, reliable and understandable. But that's not to say that you have to go and pay for a professional valuation of your assets every year. That's not what we're saying. We're saying they shouldn't be 20 years out of date, but they don't have to be from 2 months ago. They should be relevant, reliable and clearly understandable. There is a recommended best practice format, and we've done that up as a toolkit on the website. It's a spreadsheet and it will take you through how to lay out those accounts. You don't have to follow it in law. We strongly recommend that you do. And we've got specific guidance on receipts and payments accounts for smaller charities to help you out there. This is all designed so that you don't have to go and get professional advice. If you need professional advice because you're an especially large and complex charity, then do. But for small charities, the idea is that the guidance should be enough to talk you through what you need to do. If you are a larger charity and you're preparing accruals accounts, or you're a company charity and you must prepare accruals accounts, then you'll be using the charity sort. So if you have an income of over 250,000, you must prepare accruals accounts in accordance with the SORP FRS 102 and update Bulletin 1. And you need to consider any other requirements. So for example, if you're a charity that's smaller than 250,000, but your own governing document says that you have to prepare accruals accounts, then you have to. The SORP is complex. We recognise that. We're discussing that at the moment, the various charity regulators, but it's developed to deal with charity-specific accounting issues that are additional to FRS 102. So in particular, it's got elements relating to the trustees annual report and fund accounting. It's got issues in it which wouldn't be in other kinds of SORPs. So it spells out, in addition to the actual financial accounting, what needs to be submitted to us. So the reason for all that additional disclosure is to ensure that there's a really high level of accountability and transparency in charities that are over a certain size. So your SORP accounts must include the statement of financial activities, often referred to as the SOFA, a balance sheet. They must include notes to the accounts, and they must include the trustees annual report, as we talked about in previous slides. And for larger charities, there has to be a statement of cash flows. And again, all these thresholds and details are set out in our guidance. If you're a charitable company, regardless of what size, you have to prepare accruals-based SORP compliant accounts. But to minimise the requirements of charity law and company law together to try and stop them overlapping, charitable companies can prepare a combined trustees annual report and directors report. So a director's report would be much shorter and simpler and much more generic, but you can combine that with your trustees annual report and feed the two birds with one hand and submit that both to the Charity Commission and to Companies House. So as long as it includes all the information required by the charity SORP, charity law and company law. A combined SOFA, that's your statement of financial activities, and an income and expenditure account can be adapted to meet the requirements of charity and company law as well. So we're trying to make it easier for people not to have to do two different sets of accounts. Just to note here that some people have been sending us abbreviated accounts. That's okay for Companies House. It's not okay for charities. It doesn't meet the legal requirements for charities in Northern Ireland. We require full accounts. Now, independent examination and audit. You remember we consulted on this when the regulations were being brought in, and the upshot is that the thresholds were changed. They were moved up a good deal. but all charities must have some form of independent scrutiny of their accounts, and this is new. So you have to have either an independent examination or an audit, but you don't have to have a full audit unless your income is over $500,000 a year. If your income is under $500,000 a year, you can opt for one or other kind of independent examination. And independent examination is a more limited form of scrutiny than a full audit. If an auditor is doing a full statutory audit, they're required to build up a body of evidence to support a positive opinion that's a true and fair view. But an independent examiner is doing a bit less than that. They're required to confirm that it's almost a negative assurance that no evidence has been found that suggests that certain things are being not done by the charity or wrongly done by the charity. So a full audit is a much greater level of assurance. An independent examination is a lesser level of assurance, and that's why it's proportionate to the size of the charity. So really what an independent examination is an external check on the charity's accounts by a person who's not connected with the charity, and that's really crucial. It involves a review of accounting records and comparison with the accounts that are presented, so the information that sits behind the accounts as well as the accounts, and consideration of any unusual items or disclosures that are identified in there. We have produced 12 directions for independent examiners, and they must be followed in order for the examination to be compliant with Northern Ireland law. That's on our website. It also helps the independent examiners understand what it is they have to do. So they must follow those 12 directions in our guidance. And what they do, those 12 directions, is set out the areas of work that the independent examiner will cover in their work. And there's a specific direction on writing and signing the independent examiner's report. And again, you won't be compliant with the law unless all of this is done in keeping with the guidance. There are content requirements for the independent examiner's report, and these are set out in law in those 2015 accounting and reporting regulations. And you'll find template reports on our website. So we've gone through and set out those various pieces of content for you, and the guidance is there for everyone to have a look at. Really, when you're thinking about who's going to do your independent examination, if you're larger than $250,000, you've got to find someone who is qualified and recognised by the professional bodies that are set out in the legislation. Our guidance says who they are. But if you're smaller than that, it's somebody that the trustees believe is competent and is an independent person. So just be sensible about that. They have to be genuinely independent. They can't be another trustee. They can't be married to or related to another trustee. They can't be somebody who does a substantial amount of business with the charity and on whose interests might be skewed in terms of their relationships with the charity. But they don't have to be an auditor or a finance professional. They have to be somebody who you think can competently follow our guidance and give a verdict on your accounts. And that's something the trustees have to assure themselves of. So the directions for independent examiners, I'm just going to rattle through quickly. This guidance is on the website, but just so you know what I'm talking about, these are those directions, and not all of them apply to both sets of accounts. There's one that doesn't apply to receipts and payments. So the first direction is about examination and accounting thresholds, and what your independent examiner is checking for is whether your charity is eligible to have an independent examination. So if they start to look and find out that your income is over 500,000, or you present them with a set of group accounts, they're going to say to you, sorry, you need a full statutory audit. The second one is about independence. So they have to check for any conflicts of interest that would prevent them from carrying out their independent examination, in addition to the trustees already having considered whether there are any conflicts there. Direction 3 is about documentation and what they have to record in the process of the examination. The fourth one is about planning the examination and how they'll carry it out. The next one is checking that accounting records are kept and there are no material misstatements, that they're true, in other words. And direction 6 is checking that the charity accounts are consistent with the accounting records, so that the accounts that are finally produced are consistent with the financial information that the charity has been keeping during the year. The next one then is checking that any identified conflicts of interest or related party transactions were properly authorised, so that the charity came to the Commission where required, if they were making payments, for example, to trustees, and that they're appropriately disclosed in the accounts. The next one is an analytical review, so it identifies items to review and follow up for further information by the examiner. The next one is about checking the form and content of the accounts. So depending on the size of the charity or whether it's a company or not, is it doing the right form of accounts? Should it be doing bills? Should it be doing receipts and payments? And then the next one only applies to accruals accounts, and that's about checking the reasonableness of significant estimates, judgments and accounting policies used in the preparation of accounts. That doesn't need to be done in receipts and payments accounts. So that's only in that bracket, where either you're a company or you're between 250 and 500,000. The penultimate one is comparing the trustees' annual report for the accounts to make sure that one isn't saying one thing and the other saying something completely different. And then finally, it talks about writing and signing the independent examination report and sets out exactly how that has to be done. So that guidance is all on there, and it's step by step for the examiner to follow. So who can they be? If it's a charity under 250, as I said earlier, 250,000, they have to be an independent person who's reasonably believed by the trustees to have the ability to do it, and who is genuinely independent. And that will be covered by the examiner's own considerations under Direction 2. If the charity is over 250,000, the independent examiner must be a member of one of the professional bodies listed in the Act and in our guidance. And so when you, as trustees or charity staff, are thinking about relevant experience and knowledge, what you really want is somebody who is familiar with fund accounting, familiar with the characteristics of a trust, including the responsibilities of trustees and the role of the governing document, which is crucial, obviously, in a charity, a good understanding of the charity's sort, if they're looking at accruals accounts, which are obviously complex, and an understanding of company law accounting requirements in a charitable company. So that's really important, because that can be slightly different. You're trying to feed the two birds with that, and don't forget, with your one report meeting two sets of regulators' needs. We've got example reports on the website in the guidance because we thought it would be helpful to show what it is that the independent examiner might be presenting us with. So you, the trustees, and the staff will know what it looks like, and so that the examiner themselves would know what a finished report would look like. So we've got various examples on the website. One example is of a non-qualified report. So they've looked, they've found no problems. It's a non-company charity, and it's an independent person because the charity is lower than £250,000 income per year. The next one is a qualified report for a non-company charity. So it's not preparing SORP accounts, it's preparing receipts and payments accounts, but it's qualified because it had failed to separately identify restricted funds. So that's not a clean bill of health. The next one is a qualified report where a charity that's not a company is preparing receipts and payments accounts and has failed to properly maintain accounting records. So these are things that the examiner would be looking out for, and we're kind of demonstrating how they might report on them. And then the next one is a qualified report where a charity that's not a company has made a cash payment overseas without evidence that the funds were properly spent. And that would have triggered a statutory duty to report that to the Commission when it arose. The auditor would have to report that to us, and the examiner would have to report that to us under the law. So we've tried to set out in those example reports what the final product might look like. Now, moving on from the independent examination reports, there's the annual monitoring return. This is a key regulatory tool for us. And we do get asked, and I think we're going to be asked more and more as the years go on, why do you need us to fill this out when most of the information is already on the register or is already in our accounts? We need you to confirm, because a lot of the fields are pre-populated, we need you to confirm that that information that we have on the register is still correct, because keeping the register up to date is really important for public transparency. It's important for other things that I'm going to talk about in a minute. But also, we ask you to repeat some things in the annual monitoring return, some totals, some numbers that are indeed in your reports. But if we can't pull them out of the annual return form, we can't analyse them. Because we can't read a PDF. We can't use our computer systems to do calculations, to do ratio analysis based on a PDF of the accounts. It's not possible. There is no PDF reader that anyone's been able to identify that will do that. So we ask you to pull out some of those specific numbers so that our systems can analyse them. We're never going to have the thousands of staff that would be required to look at every single set of accounts, but we can design our systems to use the information in the annual monitoring return and pull out information and risks about charities. And we're going to be doing that more and more. We're not starting to do it this year, but we will be more and more relying on risks to use our scarce resources and our regulatory intervention only in the highest risk cases. And in order to identify what those are, we may ask you to pull out more information into the annual monitoring return so that we can do more analysis without human sets of eyes on it at that stage. So in the coming years, I think you can expect more and more of that from us. The information collected is largely, but not totally, displayed on your entry on the register, and that allows the public and your funders and others to find out more about your charity and others. So who completes what bit? Part A is completed by everybody, and lots of that is pre-populated. We ask you to review the information that's already on the register and ensure that it's kept up to date. Now, this is a legal requirement. It's not just helpful, it's the law, that you must keep your entry up to date. And there are bits of that that you can do yourself using your online password on online services. And there are bits, if you make certain changes, that you have to come and tell us about, and we will make the changes. But you must ensure that your register entry is kept up to date, and not everybody is doing that. Part B then is compulsory for all charities that are over £10,000 income per year. And the information that's in that is what type of accounts you're preparing, cash accruals, receipts and payments or accruals. What type of review are you having? Is it an audit or an independent examination, or have they not been reviewed? And if that box is ticked, then you can be expected to hear from us. Is there any other register or registrar that you are registered with? So that might be Companies House, it might be the RQAA, depending on the nature of your work. There could be a number of other regulators or registrars. You could be an Industrial and Provident Society, for example, and be registered with that registrar. What are your numbers of staff and volunteers? And we don't include trustees in those volunteers because we already know the number of trustees and we don't want to double count them. Do you own or lease capital assets, land or buildings? We want details of payments, any payments that you might have made to your trustees, and this actually includes out-of-pocket expenses and payment for services. And details of any transactions with your trustees. Have you leased property from them? Have you entered into contracts with them? We need to check there's no private benefit going on. We want to know about your fundraising, and we want to know whether you claim gift aid if you're entitled to it.
Just a question.
And we've got a question coming in.
I've just unmuted Nigel Beatty.
Nigel, can you hear me?
Nigel? Don't know why I should say that. Why is it? You should hear me.
Oh, we can't hear Nigel, unfortunately. Nigel, could you maybe email your question and we'll pick it up that way?
So why is there not an example of an unqualified report for a charity that is a company?
I don't know. Nora stole my pen. Can I have it back for a second? I'll write that down. So an example of an unqualified report
for a charity that is not a company.
For a charity that is not a company.
Yep. So
right. There is that the first example there is an unqualified report for a charity that is not a company and has an income of 250,000. Is that? I know the rest of them are all different kinds of qualified reports, but is that the example you were looking for?
Unless he doesn't have sound maybe on his laptop.
Oh, right. Okay. Can you type an answer back?
Yeah. So what was it again? Great.
The first example on the slide I gave is an unqualified report for a charity that isn't a company.
There is. It was the first example?
Yeah. Okay, we'll move on then. Thank you very much for that. Part C is completed only by large charities with an income over 250,000, and we ask for more information here. So we ask for a breakdown of your income and donations. We ask for a breakdown of expenditure. We ask for your recognised gains and losses and details of your assets and liabilities. So that's only for charities that are over that £250,000 threshold. Now, a key part of the annual monitoring return is the declaration. This must be completed by all charities, and in that we ask that your trustees can affirm that they have had regard to the Commission's public benefit guidance, that any serious incidents that should have been reported to the Commission during the year have been reported, and if not, why not? We ask if your charity works with children or vulnerable beneficiaries, does it have the relevant policies in place? And clearly safeguarding has been a huge issue in some charities this year, and we found a number of charities in Northern Ireland who said they did work with children or vulnerable beneficiaries and did not have the relevant policies in place. And we asked you to attest that the information provided is accurate. All trustees must be satisfied that these things are true. If you're ticking the form in the annual monitoring return declaration, you need to be aware that it's a criminal offence to deliberately provide false or misleading information to the Commission. So this is being done in your name. You must be comfortable that all those things are true. Now, as you're financial year comes to an end, you've got 10 months to submit your annual return and accounts. We send you a reminder one day after your year end, and then 7 months after your year end, and then 9 months after your year end, and at that stage you've got 1 month to go. If you don't send us anything, the day after your reports were due, we send you a default notice to say your charity is in default. Then another 3 months later, we send you a notice saying you've been in default for 3 months, and we do the same again at 6 months. And after that, we start to publish your name, along with it saying in default in big red letters on the register. We publish a list of defaulters that are past a certain date that are older than 6 months, and we share that regularly with the media. So that's not a good position for your charity to be in. Those reminders and those default notices will only get to you if the information on the register for your charity is up to date. We have people cutting out. This is not an excuse, because there's plenty of guidance and the law is very clear. You don't need to wait for our reminders to know you have to submit your annual returns and accounts. But we wrote to trustees and said we haven't heard from you, and some of them wrote back and said, oh, we haven't heard from you, we haven't got any of your reminders. And it turned out that all those emails were going into the inboxes of people who had once worked or volunteered for the charity and weren't there anymore, and nobody had updated the register. And we did a snapshot of this in April last year, and we found that 4 in 10 charities had gone nowhere near the register since they registered. So if those organisations had had AGMs and had changed their trustees, they had not gone on and changed any of those details. If their contact person had changed, they hadn't gone on and changed the details. So those charities were at risk of not getting any of our regulatory updates, any of our reminders, or any of our default notices. So we really encourage you to go on, use online services, do it during the year as things change in the charity. Don't wait till year end. Go on, and as things change in the charity, change them on the register. It's a legal obligation to keep the register up to date. So just get into the habit of doing it. What happened was earlier this year, for the first time in January, we sent a number of text messages direct to trustees. If we hadn't received their annual reporting information, we texted out to them to say, you're due to submit, we haven't heard anything from you. This was hugely successful. And so we did it again in June this year. And where we hold the mobile phone numbers for trustees, this is a very useful way of saying to people, we haven't heard from your charity. It's your responsibility what's happening. And trustees were contacting us and saying, oh, we didn't realise we had to do this, or somebody else is dealing with that, or I don't know who's doing that, I've never heard of it. It's up to the trustees to ensure that this is being done. It's being done in their names. They should know all about it. They should be discussing it at their board meetings. If these things are being ticked on the register to say that the charities, that the trustees have done certain things, the trustees need to know about all of that. So the trustees may be hearing from us if we haven't heard from the charity by the date that it's due to submit its annual return. What then happens? We, when we get them, publish them online to the Register of Charities, and I'll talk a wee bit in a minute about the fact that that is automatic, and so it matters what you send us by accident. We assess a proportion of the documents that we get, not all of them. We won't be able to do all of them. We did around 53% 2 years ago. A year ago. In the year we're in, we're doing closer probably to 12%, and that may drop further in future years. And one of the things we want to talk about in terms of comments on our strategic plan is the fact that we will prioritise looking at those that are the biggest charities and the highest risk. So that's one suggestion we're making. We assess all zero tolerance issues. We have a number of issues that we treat as zero tolerance. So if we find any of those, we will deal with them. We may visit a charity if we think it's very serious. If necessary, we can enforce an audit regardless of the size of your charity or what the regulation thresholds are if we think there's something really serious going on and an audit is required. If you don't submit on time, as I said, your status on the register will not say up to date. It will immediately say in default, and we might use other powers. We might open statutory inquiry, for example, if we think it's really serious. What we want to talk to you about in terms of the consultation we're launching on the 26th of September is the next stage. So if you have submitted something, you're not in default. It'll say up to date, but if you've submitted accounts which simply don't comply with your legislative responsibilities, abbreviated accounts, partial information, then you'll fail the accounts check. And we want to let the public know, as I was saying earlier, that those things have been checked and they're not up to scratch. And so we're going to propose putting that on the register entry as well. So the register entry looks like this, and this is what you want it to look like. You want those green letters up to date. You don't want the words up to date to be replaced with in default in red. And that's where your accounts are displayed, your independent examiner's report or an audit report, if you're a charity that has to be audited, and the trustees annual report. So those 3 PDFs are on there, and any member of the public can go in and click on them. And that is an extraordinary amount of accountability and transparency that we just didn't have before. And it's the point really of a lot of the purpose of the regulation. What you can do, and as I said, we're producing guidance on using the register. You can search for charities that are in default. So if you're a funder, for example, you can search for those that are in default, and chances are you probably wouldn't be giving them your money. So the public can use the register in various ways, and this is one of them. So it is good in terms of accountability and holding charities that they might support otherwise to account. Now, in terms of the numbers of annual reporting and what's behind that, in the 11 months, we did a snapshot this year at the end of February. In the 11 months from the 1st of April 2017 to the 28th of February 2018, just over 3,000 charities submitted their accounts and reports to us. And what was contained, what was accounted for in those reports was 1.3 billion of charity income. That is phenomenal. And that number is going to go up year on year on year. It's an extraordinary figure. And it means there's transparency over £1.3 billion and accountability for £1.3 billion, which wasn't there before. And that's what helps the public trust you and what you're doing, that you're part of that regime. So what to avoid? I'm going to speed through this last bit. I won't cover it all in detail since I'm going to leave the presentation with Nora. But what I do want to say is the practical lessons that have come out of the thousands of reports that we've looked at in the past year or so. Those who file late or don't file at all present some of the highest risks to us, because that lack of transparency over charitable funds is a serious concern to us. And if you don't bother to comply with the accounting and reporting regulations, which is a legal duty, we consider that to be serious misconduct or potentially mismanagement by the charity's trustees. So this is quite a big deal. If you go past your deadline, we remind you, you come back and say, oh, sorry, I'm going to file them now. Your register entry will be changed from in default to due documents submitted late, and it won't go back to up to date until the next year's accounts and reports are submitted, hopefully on time. So the public will still know that if you've missed your deadline and you do send something, you still haven't met your deadline as the law requires. Now, this looking at non-compliance as serious misconduct or mismanagement has led us for the first time in the past year to open a statutory inquiry because of an issue that was raised through annual reporting and accounting, and it was what we call a double defaulter. So it was a charity that hadn't filed for 2 consecutive years. When we took a look at it, we saw that there was a lot more going on, and that led us to use our most serious powers and open a statutory inquiry. So this can be an indicator that there's something not good going on in how a charity is being run. So common basic reason for failing the accounts checks: you send us the accounts for the wrong year, accidentally attaching the previous year's accounts and reports, you'll fail the accounts check. Not including a trustee's annual report, instead submitting the meetings, the AGM minutes has happened, or a director's report, which is enough for Companies House. It is not enough for us because it won't have the crucial elements included in it, like public benefit reporting. Charities in that over £1 million income, not including a full statutory audit report, having the wrong kind of independent scrutiny. Charities below that threshold, failing to include their independent scrutiny report, which can be an independent examiner's report, or they do submit it, but it doesn't comply with the regulations because it has to be in a certain format and have certain contents. Or charities with an income over $250,000, or which are charitable companies preparing receipts and payments accounts and not doing SORP compliant accruals accounts. And we've had lots of receipts and payments accounts which don't include which don't include a statement of assets and liabilities. That must be in there along with the rest of the accounts. And charities, which are companies, have been sending us abbreviated accounts. And as I said earlier, we need the full accounts. So, as I said a couple of minutes ago, when you submit, those things that you send to us are uploaded live onto the register. If you've accidentally sent the wrong PDF, that will go live. It's published, and everyone can see it. Now, if that is your bank statement instead of your accounts, or a trustee declaration, which was prepared at registration and is maybe sitting on your desktop, that has happened, or a list of your donors, that could contain personal data, which would immediately put you in breach of the data protection requirements. So you have to be really, really careful that you are submitting the right PDF, because we're not checking it live, we're checking it, if at all, retrospectively. If you alert us to the fact that you have sent inappropriate material, so for example, we have had cases where people have sent us their bank accounts instead of their accounts, their bank statements rather, instead of their accounts, we will get it taken down as quickly as possible. But you have to tell us as soon as you find out. So there are screeds of guidance available, all listed there for every kind and size of charity and every permutation of reporting. There's also an online tutorial coming, a YouTube tutorial, and that will be out sometime in October. So we did a tutorial for registration, which walked you through the system, showed you all the screenshots, and told you exactly what to do step by step. We're doing the same for annual reporting, and it's nearly finished, so we'll be looking forward to launching that very soon. Now, I'm not going to go through all of these duties and responsibilities of auditors and independent examiners, just to say that there are two things that they need to know. There are matters that must be reported to us under the law, and those are classed as matters of material significance, and we have defined those. And there are matters that may be reported to us, and they can make a choice about those. So there's guidance about those matters, these are they, and there's guidance on our website. These are matters that are the same right across the UK. We've agreed these with the regulators in England, Scotland and Wales. And those are the relevant matters which can be reported to us, but don't have to be. What I do just quickly want to mention is serious incident reporting. Don't wait to the end of the year if something serious has happened in your charity. Tell us right away. We need the trustees to hold their hands up and tell us if something serious has happened, and our guidance tries to set out what we mean by a serious incident. So tell us as soon as possible. Confirm through the annual monitoring return when you do get to year end that any serious incidents have already been reported to the Commission, and have a look at our website and see what we mean by serious incidents. In brief, what we actually mean is an adverse event, whether actual or alleged, which results in or risks a significant loss of money or assets, damage to charity property, harm to the work of the charity, its beneficiaries or its reputation. And the most common types of incidents that we set out in the guidance are things like frauds, thefts, significant financial losses, money laundering, criminal breaches, allegations of terrorism or extremism, and crucially this year, safeguarding issues. And because of all that's been happening in the media, we have had a number of those reported to us. So if you're making a serious incident report, there are things you need to tell us about. And again, this is set out in the guidance. You need to tell us who you are, what authority you have to report, who's aware of the incident, what happened, when you became aware of it, what action is being taken, and whether or not it's been reported to other bodies. And it may be that we need to do nothing more. We just say thanks for letting us know about that, and we may check on it later. Or it may be that we need to step in and say, well, tell us a bit more about that. But it entirely depends on what you're reporting and how. So that's the end of what I wanted to cover this evening. I know it's been a gallop through a lot of information, but thank you for your time and for your patience, and I hope it has been useful. I would really urge you to go onto the website, read the guidance, use it as a step-by-step guide, and when that YouTube video is ready, have a look at it, and hopefully it will explain anything that you might be wondering about.
Thank you all. Thank you, Frances. There were not that many questions that had come through, but if you do have anything and you weren't able to raise it for whatever reason, then please let us know, and we can certainly forward that on, as well as the slides. Thank you all for logging in. Hopefully the technology worked at your side, and thank you to Frances for coming in this evening. We really appreciate the time. Good night all.